Hey everyone, welcome back to the channel. Remember, better credit means a better life. So, today I'm going to talk to you about limiting credit inquiries, and how to be selective and strategic to get an 800 score, or at least to get you on the way to an 800 score. So, if you're serious about improving your credit score and taking control of your financial future, you're in the right place. Today, we're diving into how often overlooked a topic, which is the impact, and often overlooked topic, I should say, which is the impact of credit inquiries. It's talked about a lot, but it's overlooked because people are focusing on the wrong things. Um, Now, the key to managing inquiries is to be selective and strategic when applying. But there's a little bit of work you want to do before you apply for a mortgage, especially when you're in the process of rebuilding, restoring, and repairing your credit. So, first things first, I'm going to tell you a little bit of a story. I have had a client who came to me, and amongst the other things that he had an issue with was he had excessive inquiries. And so as I'm looking at his credit report for the credit consultation with him, I saw that he had groups. There were groups. It was like waves of like 5 to 6 weeks where he would have a bunch of inquiries, and they were multiple inquiries with all three bureaus at several lenders. Because and typically most lenders they don't look at all, they don't submit to all three, they only pull one, the one of their preference. So for him to have inquiries across all three bureaus, he was just kind of like going everywhere, all over. He had nearly 20 inquiries all at the same time. So, like I often do, I ask him, I say, hey, what are these all about? And what he was doing was the way he got paid, he felt that he got paid twice a month, and then he had this sort of an overlap, and then he had a commission check that came along with it. And essentially, the commission portion of his salary would come to him about every 6 weeks. And what he was doing was every time he got paid that commission, he would try to use it. He would try to use it. He felt it was a good idea to use that to apply for something like, say, if a car note. He's trying to build his credit. This is before he came to me, and he's trying to do it by applying for a credit card. And then, of course, everybody's telling him secured card. So he ended up applying for multiple secured credit cards. And so he had five, I believe it was, four, no, six. He had six. He had six um, secure cards he had applied for. He was given the cards, and he was putting deposits down on each one of these. There would be, most of them were around $500. Some of them were, a couple were three. But I think there were two or three, and the other four were 500 that he had all put security deposits on over this 6 week period. But the problem was every single one of those credit cards, he maxed them out because he said, oh, well, I got, that. And he said, well, I did that. I said, well, why are you maxing them out? He said, well, I'm trying to build my credit. So he was under the impression that by maxing out his card, that was helping his credit, which was incorrect. He was not aware of the credit utilization ratio. He had heard of it, he had saw it, but he did not understand how it worked. So of course he wasn't applying that properly. And then he's getting inquiry after inquiry after inquiry. And he said, I'm opening up credit cards to build my credit, yet my credit's going down. I said, because you're opening up too many loans at one time. You are a walking red flag. And so with him not understanding that, he was actually hurting himself more so than that. I said, no. I said, I said, basically, why all of these cars are the same thing. They're one version. They're all the same version of the same thing. You don't build your credit that way. You have to build it through that. So then he said, well, what do I do? And so, again, he became a client, obviously, like I said. And so we didn't want to close anything because that's just going to hurt his credit even more. But I showed him the strategy of bringing down the credit utilization to 30% on all these cards in an effort. Now, he's only been my client for 2 months now. So we're in an effort to lower his utilization over time. And the goal there is to try to increase his credit limits on those cards. He doesn't need to apply for anything else. And I told him, don't apply for anything else. We need to restore and remove the negative items and build on what you already have. But that's just an example of how example of how you can't outdo negative credit with new positive credit, because number one, those are two separate things, and number two, you're always going, as long as you have negative credit items, you're always going to be limited on if you know, basically any new credit, if any at all. And the only reason why they were offering them anything is because it was a deposit. So they're at little risk, because they're not going to give you more than what you deposited. So if you go belly up, so to speak, on that, they'll get their money back, and then you'll just have another negative item on your credit report. So just wanted to point that out with that. So first things first, what exactly is an inquiry? Okay. An inquiry happens anytime you apply for credit. I mean, it doesn't matter whether it's a car loan, whether it's a mortgage, whether it's a credit card. But even some utilities are looking at credit. Even insurance carriers are looking at credit now. They will perform a credit check, and when you apply for credit, that's a hard inquiry. If your existing creditors take a peek at your credit just to see what's going on, they might be considering offering you some exclusive product or a credit limit increase. They'll peek at your credit, and that's what we call a soft inquiry, and that doesn't have any impact on your credit at all. But more on that. So, soft inquiries, no impact. Hard inquiry, impact to your credit. So, I mean, more or less, the inquiry part, it does affect your score, but it's not huge. Unlike your pay history and your credit utilization, unlike your pay history, which is 35 to 40% of your score, and your credit utilization, which is another 25 to 30% of your score. Inquiries, hard inquiries, only affect your score, make up about 10% of your score. So, and that's the total score. When people talk about points, it's estimated somewhere between 5 and 10 points per inquiry affected. But I don't like to really go with the score, because score is relative. It's important to talk about overall impact of your score, and of course impact to the quality, strength, and health of your credit report, not just the score. Okay, but that is, even though it's only 10% and it don't sound like a lot, there is an impact. Not as much as payments and credit utilization, but it does add up, especially when you're applying for things excessively, like my client, Rob. Okay, and when they see that, they think that you're an attempt to overextend yourself, and that's risky. Okay, so here's the skinny. Too many hard inquiries will temporarily drop your score. It will give to lenders and anybody else looking at your credit a perception of financial instability, and it will basically make it harder for you to get approvals in the future, especially when your score is marginal. Okay, so what are the key takeaways on that? Each hard inquiry can lower your score by a few points. I'm just going to say a few. People will always want me to quote a hard number, but I'll say it's a few points. So a few being more than, by definition, being more than a couple, which is two. So few would be three or more. But those points add up when it's inquiry after inquiry after inquiry, like what happened with Rob. Okay. And so they do make a big difference when it comes time to apply for a mortgage. I know A lot of you folks out there trying to figure out how do you get your credit together because you want to buy a house, you want to buy your home, right? So you got to be selective about who you apply to. And it's kind of like dating. You got to know who's a good match for your credit situation. So how do you be selective and strategic? Selective and strategic. I'm gonna say it one more time. Selective and strategic about credit inquiries. Now, I got some tips. I'm not really big on tips, but these are actions you need to take because, and I just like to stress to people that a tip is a little bit of knowledge that you can apply to your situation and act on it in a way that benefits you. It's not a magic pill. It's not a magic switch. It's not a hack, anything like that. It's a tip. And you follow these tips individually and as a whole, you will benefit from better outcome, you will be better. Your credit will be better. If nothing else, it won't be worse. That's the big start. But no, these things do work. I make no mistake on that. If I sound in doubt, they do work. Okay. So first thing you got to do is do your research. And I know everybody go back to school and think about research papers, research this. But why not have fun researching about money? Everybody want money, and credit is a form of money. It's borrowing money, but how we use it, that's a different story. But when you're trying to get it, it's matchmaking. You want to research lenders who want to see you as their client and who you want to see as a lending partner, because that's what you got to kind of look at. I know I'm saying not kind of. You should look at your creditors as your lending partners. Don't look at them as the people. Oh man, I owe them money. They calling about their money. No, it's a partnership. It starts out as an uneasy one because you're gonna have to pay. They hope that you do pay, and so you want to think of it as a partnership because they can borrow money, you can borrow money from them now, and you pay them back. They'll feel comfortable with you. They'll start to trust you. They'll trust how you handle your credit with them, as well as how you handle credit with your other credit partners, and then you can have access and get things that you want and be more able to do better credit things to increase the value of your investments if you don't have any, and save money and increase your savings account by not having to pay higher rates, higher payments. And then, of course, on top of that, better credit means a better life, which means you can get a better financing to afford a better home. You can get better financing to afford a better car. You can get better financing when you take out a car loan. You can get better financing when you want to a business opportunity or something like that, and you use credit in ways to leverage your income so that you can start investing in things and assets that will provide income for you, passive income. Although I technically don't believe in passive income because almost all income requires some input, some action from us. But for the sake of market definition, it's passive in that you don't have to do something every time. It'll grow on its own because wealth comes from growing things. But again, back to inquiries. So when researching, you want to look at what do they ask for, and what does their perfect customer look like. If you're looking to apply for that credit card, you want to know what is your chance of getting that card. If your credit is excellent, then you got a high chance. You usually don't have to worry about it. You're just going to pick a card that has features, benefits, rewards that appeal to you. But when you have marginal credit and you're trying to build your credit, you want basically someone who's going to have a high chance of giving you a card, making an approval. So before you apply to them, you can go to their website. Many of them have a guideline of a rough guideline or a pre-qual tool that you could plug in some basic information. If you know your credit score, they'll tell you there's a barometer that kind of tells you the likelihood, and it's usually as a percentage. It'll say, they don't tell you it's a percentage of guarantee approval. They call it a match. And so what they'll do is, if you put in your information, they'll tell you, oh, you're an 80% match for this card, or a 60% match for that card, um, or 90% match for that card. And so you want to make use of that tool so that you don't waste time and an inquiry hit on a product, a loan, credit card, whatever, that you have absolutely no chance of getting. That's kind of how Rob ended up with so many inquiries, because in his case, he got approvals because he was doing secure card, but not everyone. He only had 6 cards, but he had dozens more. I mean, he had nearly 20 inquiries so that's 14 that got denied, or he didn't take advantage of, because that was just another secured card. But many of them were denials because he applied to any and everybody based on recommendations. They say, oh, if you're trying to build your credit, apply with this card, apply with that card. And these were all those cards that claim that they'll um, give an account to anybody, but that's not totally 100% true. Because especially as you get more and more, they're like, oh, we don't want to jump on the wagon. He's already got too many he's trying to pull already. So do your research. Only apply for products that you have a high chance of an approval. And if you don't have a high chance of approval, don't apply for anything new until you get your credit healthier to be able to do that. Tip number 2, plan your applications. So again, going back to that rule about trying to apply for things within a short window. This is mostly, of course, for the automobile loans, the installment loans, and the mortgages. So you want to make sure that when you start your search for a car, for a home, and you're starting that search first, you're thinking about buying. So you're not searching for the home, you're not searching for the car yet, you're searching for the financing first. Don't spread them out. Don't deliberate. Go ahead. Once you decide to do it, take that 14 to 45 days. Say, okay, I'm on the hunt for my financing first. See, a lot of people spread out their search when they're trying to look for the financing and the car or house at the same time. I recommend we do it in phases. Move number 1, get your financing together. That's essentially like saying, how much money do I have to spend on the car based on how much I'm gonna borrow? How much money do I have to spend on the house based on how much I can borrow? So because if you're borrowing to buy these things, you don't really know how much money you have to spend to buy until you know how much money you have to spend. And so in the case of credit, for those two purposes, you're spending money that you got to borrow, and you got to know how much you can get first. So when it comes to those kind of situations, you want to borrow, know how much you can borrow first, then you'll know how much you can spend. By doing it that way, you got all your borrowing activity in one period of time, 14 to 45 days. Then from there, you'll know whether you can go forward and with your search to buy that car, search for the car at the dealership, or search for the home with a realtor. And then all your inquiries in one compact place. And now they're all only one. So you've had minimum hit to your inquiry, and now you can shop for your car and for your home, knowing how much money you got, and you can negotiate accordingly. See, there's a strategy there. And by doing it in that order, you get more bang for the buck and less dings for your duties. So that's the strategy. And that's how you plan your applications wisely. So tip number 3 is avoid impulse applications. And I'm talking about those applications where, say you're at your favorite place, you're getting you a new pair of kicks, you have to, at your favorite foot store, or you're at your favorite department store, and you're buying something nice. I mean, even for the holidays. And so you're there, and then of course the clerk doing his or her job, they ask you, they say, hey, would you like to sign up for a retail rewards card today? and we'll take 20% off of your purchase today with that application. Now, some people say, well, they kind of think of it. Here's considerations. If, in all fairness, well, I do come here a lot. I wouldn't mind having a card just for this place. That way I can free up my other credit card if I'm using that, or free up my cash a different way. It might make sense to having a card with them because I feel like I have a relationship with them. And plus the 20% off on what I'm buying right here, right now, that's short-term pleasure all day long. I'm getting what I want. I'm going to get it anyway. Now I can get it at a discount. And all I got to do is just sign up for a card, even if I don't use the card. So problem with that is, yes, short term you'll enjoy 20%, but that 20% savings on that item you are going to buy today anyway comes at a steep back end cost because number one, of course, there's a credit inquiry hit at play. And again, if your credit is marginal and weak and you're trying to build it, every point counts. So, even though it's small, every point can count. And if you're doing this every week, every month, 2 or 3 days a week, actually, and those add up. But more importantly, the financing with a lot of those rewards cards, that the interest rates are high anyway. But of course, we know credit card debt is the highest interest rate form of debt anyway. So that's why we want to use it sparingly in a very specific way. But the other part is you may end up spending more in the long haul because now that you have this line of credit specific to this retailer, now you can say, oh, I can go back and get something else. I can go back and get something else. So you end up spurring you to impulse spending that followed that impulse application for credit, which is what their whole plan is. But that's marketing for you. We just have to be smart. Don't be mad at the marketers because they're trying to encourage sales for them, but you got to do what's best for you. So I always say, think long term. Don't think short term. A rewards card is a short term benefit, but it has huge long term costs in the long haul. So each one of those applications, each creditor that you have should fit into an overall financial plan. Like I said, if you bank at a certain bank, you like them and you want to cultivate that relationship with them, you want to have more than just a bank account. You also want to have credit account. You want to have lending. Then you want to have savings and investment engagement with them as well. And you become an overall valuable client instead of just another customer who is a depositor. All they want is your money so they can use it to lend to other people. So you want to cultivate that relationship. Now, a word or two on removing hard inquiries, right? I'm going to talk about that. Now, of course, if you're someone that wasn't aware of all the things that I've talked about today, and you did end up accumulating a number of hard inquiries like my client Rob did, the question is always, how do I get them off? I read everywhere they say, oh, hard inquiries account for so much of your credit score. Like I said, hard inquiries, too many will ding your score, just like I said. So then people take the next seemingly logical step and they say, oh, well, if all these excessive inquiries are dinging my score, if I take them off, my score will get better, right? Yes and no. Now, of course, there's a lot of folks out there like me in the credit repair space, as we call it, even though I feel I'm more credit restoration because I'm not looking to temporarily boost your score with some hacks and things like that. I'm trying to show you and work with you and working on removing what negative items we can in whatever which way is proper in order to clean up your credit so that you have a healthier credit file, a more quality credit file, a stronger credit file, which will result in higher credit scores. Having said that, there's a lot of people out there that will say, hey, we do sweeps, credit sweeps. We're going to do inquiries, sweeps, and all of this stuff because people think, oh, if I just get these inquiries off, my score will go up. A lot of them talk about things like there are credit repair laws, which I know of them, where there's some language in there about if you were if an inquiry was made into your credit that did not result in an actual credit account, that somehow that makes that inquiry illegal and should be removed, because inquiries can only be reported if they resulted in credit extension. Well, here's the thing: if the inquiry was made, that's really what they're reporting. So there's really a lot of that. So, but whether you can or don't, whether you believe it can be done or not, is really sort of the point, not the point. The bigger point is it worth it? Now, again, I told you inquiries. Well, I may have not mentioned it, but inquiries, here's how they ding your credit. I mean, once you get a hard inquiry, it's on your credit for 24 months. It appears on your credit for 24 months, but it only impacts your credit for the first 12 months. So you went out, you applied for something, you got an inquiry, and say it's January 1st. So that inquiry will only ding your credit for a few points. Remember, they're only a few, for 12 months. So then January the following year, the inquiry will still be there, but it will no longer be impacting your credit. So I don't know, is it worth, some of these folks, they charge, a few $100 to remove inquiries. Now, maybe if you're like Rob and you got 20, and you got 14 that did not result in any credit, and a lot of them charge you per inquiry. I don't know if you might seem that that's not a best way, worth it to do it. I'll put it that way, worth it to do it. Now I look at it like this: if these folks are charging you 50, $100 per inquiry to raise your score a few points each, and say it's 5 points. So you got, in Rob's case, you got 14 at 5 points. I mean, that's 50, that's 70 points if it worked out that way. But I think you can better serve yourself by taking that money and using it to, if depends on your situation. If you got credit cards with high utilization, take that money, pay that down. If you got collections or anything like that, if you got late payments or past due amounts, address those first. See, there's always a way to do it. Inquiries should not be the first thing you try to remove from your credit. It should be the last thing, but usually by the time you've done all the other things, time will have healed that wound anyway, as long as you know to stop getting inquiries by a strategic, by using the strategies that I got here, right? So, yeah, it can be done, but again, it's a low priority, and it's not much bang for the buck there in terms of your credit restoration journey. Um, I mean, I feel like the money, and the energy could be better spent on the other items, like I said. But it's the choice is yours. But again, I think with strategy, it's best you want to do that, because people are looking for little bumps, and if they think that's an easy, most people think, and it's being presented as easy quick bumps. They figure out by removing a few inquiries the difference. It's fix the big things, and um, stop thinking that credit is something that can be fixed quickly. I'm going to say this: credit is, the road, or the action to improve your credit file is not steps. It's not a set of stairs with steps. It's an escalator, right? Because what people look for when you think of your credit journey as taking stairs, you take a step, you rise. You take a step, you rise. So people think that every action they take when they first started working on their credit, every action is supposed to result in an immediate reaction to their score, because that's the thing they're measuring by, the score. Because they think, if I do this, my score should go up. If I do this, my score should go up. Lots of folks out there are selling products that say, if you do this, your score will go up. If you do this, it immediately go up. And so people are looking for an instant reward. I can tell you, when it comes to the credit journey, yes, you do see some wins early on with a few things, but you're not going to get this stair step effect. And so a lot of people either quit the process, even if they're trying to do it on their own, and the process takes even longer if you don't do it in the right order and address things the right way. But what happens is when people are looking for an immediate reward to every credit restoration step that they make, then they get frustrated and they quit. If they hire someone like me and they don't see instant results, they get frustrated and quit. But I tell them while they're going up the steps and they keep looking back and they keep looking for something that, if they take a step, if the credit journey is 10 steps, they take one step and they're looking for the top. Not there yet. They take 2 steps, still looking for the top. 3 steps, looking for the top. 4 steps, looking for the top. And each time they take a step, they keep looking for the top. And if they don't see the top yet, they say, oh, this stairs lead to nowhere. And they go back down. Where credit restoration, the true credit restoration, is the escalator. Yeah, the escalator is going up slowly. And instead of looking for the escalator to end, they know that when they're at the top, they're at the top. But as they get higher and higher, the view gets higher and higher. And so they're concentrating on the view, looking up rather than looking for a reward at the next step, because they don't see the escalator as a series of steps. They see it as one big step. You get on at the bottom, you get off at the top. I don't know if that metaphor helps, but you got to look at it that way. And I'm gonna tell you like this. I don't know if a lot of you know about bamboo, because I talk about this one a lot. If you've seen some of my other videos, you may have heard me talk about it. Bamboo is a grass. A lot of people don't know that, but bamboo is a grass. But a lot of people are surprised to know that the way bamboo grows. Now, it varies amongst different species of bamboo. Some species take as long as 4 years. Some take as long as 15. 4 and 15 to do what? It's the seed. When bamboo seed is in the ground, again, let's just say this particular species that's real popular, it takes about 4 years for the bamboo to grow. And you say, wow, what do you mean? Okay. The bamboo seed is in the ground. It's growing in the underground in the dark. It's being watered, whether it's on a farm or in nature through rain. But the whole first 4 years of that seed, its life cycle, it's not growing anything above the ground. It's growing outward. It's growing a huge network of roots and a huge root system. 4 years, it's just growing and growing and growing underground, spreading further and further and further, so that over that 4 year time, that root system is strong. And it needs to be, because here's what happens next. On year 4, 4th year, first day after, it finally starts to sprout above the ground. But here's the amazing part. It starts to grow straight up, long stalk, straight up. It grows at about a rate of 3 feet a day. And it grows fast, 3 feet a day for 60 days. So all of that work, all of that literal groundwork, results in a sudden eruption of the plant and a huge explosive level of growth over the next 60 days after that. So that 60 days of amazement came on the heels of 4 years of unrewarded toil, or at least an invisible toil, at least above the ground. And credit is like that. Life is like that. Most things in life worth having come at the expense of a lot of background, underground toil and work that doesn't seem like anything's happening. And then boom, explosive growth. I mean, how many times have we seen people who seemingly became rich overnight or wealthy overnight or had a huge success out of nowhere, and they'll all tell you, I worked at it for years. I did this for years. Because that's the universe. That's the universal truth that huge explosives of success of any kind come on the heels of years of hard work with no apparent results at first. But we're being taught to look for a reward for everything we do right, and so we want an immediate reward, and and then many people sacrifice long-term success for short-term rewards, short-term gains, short-term reactions. And so change your thinking. Forgo short-term for the long term, and the long term will endure and be much larger than that. So I just like to put that out there because I believe that mindset is huge in your credit renovation success, and your credit building success, and your life and wealth building success. So remember, better credit means a better life. A better life means a better life. So hopefully you found this information helpful, useful. I'm going to ask that you please like and subscribe to my channel. It's no cost to subscribe. Please like it. Please share it with others who you think may be helped by the action steps and by the instruction and the information and knowledge here. Because my goal here is just to let everybody know about it, because I can only help one client at a time individually. I have many clients, but I help them. But I also, this is the same stuff that I tell them in their consults. And so I hope that this helps you in your credit journey, whether you're doing it alone or whether you're being helped by someone. Hopefully, whoever's helping you is telling you the same things that I'm telling you. So with that, I just want to say God bless and thanks for your attention. Stay tuned for the next video. Take care.